Applied Digital stock was on fire last week. Shares of the AI data center developer more than doubled after the company announced a major new lease agreement with fast-growing AI data center operator CoreWeave. And it's a big deal. Over the course of 15 years, Applied Digital anticipates generating approximately $7 billion of revenues from the leases with CoreWeave. Interestingly, CoreWeave has been one of the best performing IPOs of the last several years. And that's caused investors to wonder whether Applied Digital could have similar price performance over the coming weeks, months, and years ahead. Now, this is the question we will address in today's Equity Empire Chart Analysis session. My name is John McHugh. I'm a former Wall Street analyst, hedge fund manager, and independent trader for the better part of 20 years. Today, we're going to be looking at clues, looking for clues in the chart to see where the big money might be stacked up, patiently waiting for a pullback for a quick bounce trade or a lower entry price for a longer term position. And the way we're going to do that is we're simply going to be looking for support levels. And there is a support level right here in the 1072 to 957 price range. Okay. If we change the time frame and look for a closer support level, closer to current price, for a quicker bounce trade, there is a support level for a more aggressive entry, if you wanted to get a little more aggressive on an entry here, and that would be in the 1338 to 1249 price range. So two support levels to consider for a bounce trade or a lower entry price for a longer term position. Now let's go take a look for a technical clue as to where there might be some technical resistance to encounter if price does continue heading higher. And there is a resistance level right here in the 1827 to 1972 price range. Okay, so what we have now is we have two support levels to consider for a potential bounce, and then we got a resistance level to think about for a price target, or where price may start running into some resistance if it were once again to head higher. So the way to construct a trade, the aggressive setup would be looking for a bounce off this upper level. Okay, that's pretty aggressive since that entry price is almost double where the stock was just a little over a week ago. So that's a very aggressive entry. If you're an aggressive trader and looking for aggressive entry, you could potentially place a buy limit order at 1338, protective stop just below the 1249 price range, and you can bring your target up just in front of that resistance level that we identified. And that trade setup right there has a 4.8 to 1 reward to risk ratio. So in other words, for every $100 worth of risk you would take if you were to place that trade, you could have a reward potential of $480. Okay, so that would be potential trade setup number one, and that's a pretty aggressive trade setup. Okay, a more conservative trade setup would be placing a buy limit order on the top of the lower support level, the 1072 price point, protective stop just below 957, and the same target price. Okay, just in front of that resistance level. And that trade setup has a 6.1 to 1 reward to risk ratio. So in other words, for every $100 worth of risk you take on that setup, it would have a reward potential of a little over $600. Now let me quickly point out, put on the chart here, a little dash line where you'd have, just like going out onto a high wire. You don't want to go out to a high wire if you were to walk across a high wire without a safety net. So this, whenever you place a trade, to do so without a protective stop below that level is very, very risky. So I'm going to put an indicator where the support levels would, the protective stop levels would be on both of these trades, and that's that red dash line. Okay, so ideally, if you were going for the aggressive trade, this is how it ideally play out. Ideally, it would pull back to that support level and bounce right off of it. Okay, that would be the ideal trade setup for the aggressive entry on the upper support level. Now, what might happen is it might just gap up and head straight to the resistance level, and that one might never get filled. Another thing that might happen is price may just drop all the way through it and head to the lower support level. Those are the scenarios that you need to consider possibly happening before you place any of these trades. But if you wanted to go for the lower support level, you would be hoping that price would play out something like this. You'd have a gradual pullback to that support level, bounce off of that level, and work its way higher and go test the resistance level. Okay, so that would be the ideal the way price would act if you wanted to go for the lower support level. Okay, so 2 trade setups to consider after a major news announcement between Applied Digital and CoreWeave. So let's wrap up today's session, folks. Hope you enjoyed the session. I'll be back each day this week for more technical analysis. In the meantime, wishing you the best of luck in your trading and investing, and we'll see you soon.